The Congressional Budget Office is forecasting federal deficits to be $2.1 trillion higher over the next decade than initially predicted. In just 6 months, from January to July of 2024, America's national debt skyrocketed nearly $1 trillion, moving from $33.99 trillion to $34.86 trillion. And with the budget deficit projected to hit $2 trillion, alarm bells are ringing across the financial and political spectrum. The American budget deficit is projected to continue to rise significantly over the coming decade, and U.S. debt right now is nearing 100% of its GDP. At near zero interest rates, large debts like this may be manageable, but with the higher rates like we have now, these debts have become a significant economic burden. Mike Pompeo, a former Secretary of State and ex-CIA director, is viewing this debt as a national security threat, and with record high debt leading to dollar deterioration and allowing U.S. rivals to gain control and influence over the global economy, he says persistent high debt, interest rates, and inflation can contribute to weaken the value of the U.S. dollar in the long run. A disastrous outcome that would only benefit America's adversaries in Beijing, Moscow, and Tehran as they seek to recenter the global economy away from the United States. Now, the consequences of ignoring this debt are dire. Higher debt servicing costs mean less funding for critical public services and reduced capacity to respond to crises. Increasing bond yields would be necessary to attract investors. This translates into higher borrowing costs and in turn slows economic growth. This also causes investors to crowd into government bonds for their high yield, and it dries up investments in the private sector, which stalls out the economy. Now, it's still possible that America can outgrow its debts if inflation is defeated, if interest rates are lowered dramatically, and if productivity finds a way to surge. But meanwhile, the International Monetary Fund has reiterated its warning that U.S. debt needs to be urgently addressed by cutting spending or raising taxes by nearly 4%. Economists are also pointing to the more worrisome solution of allowing high inflation to devalue that debt by making money less valuable. Now, the global implications of this debt crisis are significant, potentially leading to a global recession or a loss of the US dollar as the world reserve currency. And so as we face this looming crisis, investors are seeking ways to hedge. JP Morgan actually advises adding non-US dollar denominated assets and real assets such as infrastructure, gold, and commodities into your portfolios. Precious metals, especially in a gold IRA, can protect the value of your retirement savings from the consequences of America's runaway debt. And so if you're concerned about what you're seeing in the economy, I'm Makai Block with American Hartford Gold. Give us a call today and we'll discuss how adding physical precious metals into your portfolio can give you the protection that you need.
Discover how gold can help you protect yourself and your family. Call today or visit our website for more information at AmericanHartfordGold.com.